Hey warriors, let's start the revision of the assessment of NPO topic. This is for your CA final November 2024 exam students. Yes, without wasting any time, let's get into the quick revision of this. We are looking at what is called as non-profit organizations, which is defined as the charitable entities. Yes, first thing to understand before you get into the topic is what do you mean by charitable entity? Income tax comes and clarifies under section 215. Charitable entity includes any kind of relief to the poor, any kind of education, any kind of yoga, medical relief, preservation of environment, monuments, places, objects of artistic or historic nature, or any advancement of any other general public utility. This is what is the more critical thing, people. You're looking at any kind of advancement of general public utility. For that, income tax is now come and clarified that when it comes to advancement of general public utility, you can only call it as a charitable organization if the amount which is received from the trade, commerce, or business does not exceed 20% of the total receipts, including the donation. Meaning, if you are going to make any kind of donation which is exceeding these amounts, then it will not be allowed as a charitable activity. You'll be denied the exemption. While yes, they are also coming and clarifying that when it comes to these kind of items, a promotion of sports and games are also called as charitable purposes, and any kind of rural reconstruction and upliftment of masses through cottage industry shall also be provided as relief for poor and therefore allowed as an exemption. Some case laws for you to remember from exam perspective. The first thing they're coming and saying, if the accounts disclose that the amounts charged are significantly higher than the actual cost of services, the assessee's activity can be treated as trade, commerce, or business. Basically, they're coming and saying, if you're going to have any kind of person, whose activities are having a profitable nature, meaning you are having more income than the expenditure, then you will classify them as a charity. You will classify them as entering into trade, commerce, or activities. If such of the things are happening, then the assessing officer shall on a yearly basis examine whether the limit of 20% is adhered to. Understand, it is not taxable every year just like that. You have to check every year for a 20% limit. If the limit is breached, then it is not a charitable organization and fully taxable. But if the limit is not breached, you will still allow them exemption on an year-on-year check basis. How do you understand the format of a charitable organization? First things, very simple. Whatever receipts you have, everything will become taxable. So take into consideration all your gross receipts, your other incomes, your voluntary contributions, any other kind of sale consideration you're receiving from sale of your assets, and then any kind of capital gains which you may have. Take all the receipts into consideration, including any kind of donations which you may have. These donations will then have to be split into voluntary donations, anonymous donations, and taxable anonymous donations. We will do that separately, but right now take all your donations into consideration. After taking all those donations into consideration, 15% of whatever amount you have will be allowed as an amount allowed as accumulated or set apart without any restriction. Meaning, to the extent of 15%, I have no restriction. You can do whatever you want with it. The balance amount which you have will now have to be applied for the purpose of charitable reasons. So it can be allowed for purchasing assets, for purchasing expenses, for doing any further applications, and whatever the case may be. If you do that, great. If you don't do that, whatever is the shortfall which you have will now become taxable under the head PGBP. Let's say assume PGBP. Yes, that is what the taxability will come under for the charitable organizations. You may not be having it as a part of syllabus, but it is clarified that it will be taxable as PGBP with an AOP taxation of MMRs. Yes, again, not so much tested from exam perspective. Let's just say it is taxable as income. Yes. Now, if you move forward and you try to understand each item, they will come and say that, Rahul, whenever you have any income coming from any kind of receipts, whether it is a donation or otherwise, everything will become taxable as an income, except for any corpus donations. Meaning any donation received by me which hits my corpus, my balance sheet, will not be taxable under this chapter, provided all the corpus are deposited in a 11.5 modes. Meaning I should have deposited in permissible modes. It should not be lying in a random account. It should be done as per 11.5 modes. If you do that, then the corpus donation becomes exempt from taxes. But if you don't do that, it will become fully taxable. Second item, they're coming and saying any other receipts which you have, you will now allow 15% of that as accumulated or set apart without any restriction. No restrictions will be given on those. Every other income will have to be applied for the purpose of Indian operations. Income tax is not very comfortable giving you any kind of exemption for any application happening outside India, except for two things. They're saying, I will allow this only for promoting international welfare. If you make the payment outside India, I will still claim it as an exemption, provided it is done for international welfare. But if it's for any other reasons, I am not granting this exemption for you, which means any foreign receipts applications will not be allowed as deduction. Next things which you need to keep in mind is that if you are going to receive any voluntary contribution which is either for the purpose of renovation, repairs of temple, mosque, gurudwara, church, etc., then these items may be treated as a corpus donation. Provided such corpus is applied only for the purpose for which contribution is made, meaning it's received for a specific reason. Second, it is not utilized for making contribution or donation to any other person. I should not put this money to someone else. Third, it is separately identifiable. I am able to find out how much donations I have received. And fourth item, it is invested in 11.5 modes. Same logic of 11.5 modes will be applied, but three things prior to that, you should not give it to someone else. You should use it for intended purposes only, and it should be separately figured out. You should be able to separately figure out. Yes. However, in case any of these conditions get violated in the future years, in the year in which you violate the condition, it will become taxable in your hands. At the same time, income tax is coming and clarifying that when I talked about receipts, all receipts which I spoke about will be fully taxable. I don't care even if it was exempted under any other section. So income tax gives you an explicit clarification that if you have any kind of amounts which are generally exempt under 1023 EC, 1046, 1046A or 1023C also, it does not matter. Those amounts will also be taxable under the section of charitable organizations. There is only one exception to the rule, which is your agricultural income. Income tax gives you a specific clarification saying if the person is receiving any agricultural income which is exempt under section 10 clause 1, then that will continue to be exempt under charitable organizations as well. That income alone is not something which I will be collecting taxes on, but any other income which is given a specific exemption under Income Tax Act will have to be included in your receipts as well for the purpose of satisfying the 15% and the 85% criteria. Second, I am coming and saying that Rahul, if you are going to have any business activity, I will consider those business activity as also exempt. Understand, subject to the 20% rule. Any other activity which is there less than the 20% rule, if those are there, then those will also become exempt from taxes, provided the business activity is incidental to the main objects. Meaning, whatever business activity I'm doing, it is relating to my charitable activity as well. If you can prove that way and you can maintain separate books of accounts, it will continue to be exempt under charitable organizations as well. Yes. Next, how do you apply your income, people? You have to apply your income in any of the following formats. You can use it for purchasing any capital assets, for any revenue expenses, or for giving donation to any other charitable organization as well. Any of the three reasons you can use this payment for. But please bear in mind that when it comes to capital expenses, if you use it for application, those assets are not eligible for depreciation. You may get an IC exam question where they may come and say that there is a capital asset which is not purchased from these assets. In that case, you can claim depreciation. But if you're using the charitable incomes for it, then it will not be allowed for depreciation. When it comes to your donation to another entity, income tax has come and clarified that if you are going to give a donation to another entity which is for their corpus, it will not be treated as an application. Meaning, if I give a donation to another person, the other person should use it as his regular receipts. If he's going to use it as his corpus, I am not going to allow a application to it. But current year amendment also comes and clarifies that if you are going to give a donation to another person, only 85% of it will be allowed as a deduction, 15% of it will be ignored. The idea is very simple, people. If I am also going to remove 15% of my receipts, I cannot be coming and saying that I'll remove 15% of receipts but pay the whole amount and claim the full application. So they say if you're anyway going to remove 15% of your receipts, when you donate it to someone else also, you should remove 50% from that also. Meaning, if I'm going to donate, let's say for example 100 rupees. If I'm going to donate, let's say for example 100 rupees, then in that case income tax comes and says you donate 100 rupees, but I will grant you application only for 85 rupees. Please bear in mind that this will only be done in case the other person is not putting it in his corpus. If the other person puts it in his corpus, then no application will be allowed. The whole 100 will get denied for you. Yes, please bear that alone in mind. Can we go forward? Sweet. Let's go forward. Other items as an application, they are coming and saying if you repay any loan in the current year, income tax comes and gives a clarification saying if you are buying any expenses, in the form of capital purchase or revenue purchase, it doesn't matter, but it is done by taking a loan. The loan amount which you received will not be called as income. But at the same time, the payment made for the expense will also not be called as application. Because please understand, you took a loan and you paid the expense. Therefore, there was nothing from the charitable entity which was used for this. On the contrary, income tax comes and says when you decide to repay the loan, in that year you can claim it as an application. So which means any receipt of loan is not allowed as an income. Any Payment of expense from the loan will not be allowed as an application, but at the same time, repaying of the loan will be allowed as an application, provided the loan has been taken for charitable and religious purposes, and the repayment is done within 5 years from the end of the previous year in which the investment or the expense was taken. Yes, so when you took the investment or an expense within 5 years, if you have repaid the loan, then you get an expense a deduction. Otherwise, you don't get the deduction. Notice carefully that this clarification has come only as an amendment in the current year, and therefore the 5 years rule was not there prior to this. In case in exam they ask you a question where they come and say the loan was taken about 5 years ago, and current year the person is proposing a payment, you will come and say I will ignore this transaction because in those years this amendment was not even there. Because the amendment was not there, that year itself when you paid the expense itself, you would have got an application. And therefore those will not be taken into consideration. Please bear that in mind. Yes, let's go forward. They're coming and saying that, Rahul, as a part of charitable organization, even if you are following an accrual system of accounting, for the purpose of application of income, I'm only going to allow payment basis. I will not be allowing anything on a accrual basis. Only payment basis transactions are permitted as a deduction. Yes, second thing I'm coming and saying that, Rahul, if you are going to have any kind of expenses which are forming part of your corpus donation, then those will not be allowed as an application. However, in case the money in the future has been reversed back, within a period of 5 years, then you can claim that as an application. So it says any expenses or investment which is financed from the corpus donation cannot be claimed as an application. But in the future, if a taxable income is deposited in the 11.5 modes, then that corpus donation can be claimed as an application, provided it is done within the period of 5 years. And the expenses do not violate any of the following conditions. They do not use for any promotion outside India. They do not give it as a donation to any other person forming part of their corpus. They satisfy all the conditions of payment of TDS and payment of cash basis. Any kind of excess application of prior years are anyway denied for you, and any claim is done on actual payment basis. They are not given to any person for the benefit of section 13. Yes. The last thing for you to keep in mind is that any question which comes and says that there is a person who has excess applied in the past years, and is proposing to carry forward in the current year, you will say this is not allowed. Any past year's excess application will be denied for the purpose of application in the current year. It's a gone loss. I do not take that into consideration. Yes. So any excess application of the income of prior years cannot be claimed as a deduction in the current year. I've given some examples for you. Please pause the video if you want to notice this. You can notice this from the video and then you can take it forward from there. Going forward, if you're going to have any capital gains, the very simple straightforward thing which ICAI comes and tells is do one thing. Whatever receipts you got in the capital gains, treat it as an income. And whatever purchases you make going forward will be treated as application. Full stop, khatam. That's all you need to focus on. While your section 11.1a will come and talk about different modes of doing this capital gains computation. The straightforward logic from ICAI is that you take the income which you got from selling of the asset as a receipt, and you take the asset purchase as an expense. That is what the straightforward logic will be. Yes. Going forward, income tax comes and says that, Rahul, whenever you are into charitable organizations, you will still have to follow 3 sections of PGBP. One is your 40A and 40A, then your 40A3 and 40A3A. Basically, income tax comes and says whenever you're making any expense payment and you want to treat it as application, if the expense is liable for TDS, please ensure that you do your TDS on time and you deposit the TDS before the due date of return filing. If you do so, then the expense will be allowed as application. If not, then 30% of the expense, if the payment is made to a resident, will be denied for you, and will be allowed in the year in which you pay the TDS. Second, whatever expenses you want to pay, please ensure that the payments are happening by account pay check, account pay draft, electronic clearing system, or other permissible modes. If you choose to not do it by those modes, then the payment should not exceed 10,000 rupees. If you end up making a payment more than 10,000 rupees by non-permissible modes to a single person in a single day, the application will permanently be disbarred. I will not give you the application for those. For all the cases where you come and say that, no, Rahul, I have taken an accrual in the current year, and in the subsequent year, I am going to pay the money by cash. Section 48(3)(a) will apply. But yes, let's be aware about the fact that from the current year, ICAI itself has come, income tax itself has come and clarified that you can only claim expenses on an accrual basis, payment basis. You can only claim an expense on a payment basis, and therefore the provisions of section 48(3)(a) are right now not relevant. It does not be enforceable because you cannot claim an expense on accrual itself. So therefore there is no question to be asked here. You can ignore this provision. Yes. Coming forward to the deemed application. Now what happens in case I don't apply the 85% properly? What happens in case I don't apply for 85% properly? Income tax comes and clarifies, if you are not able to apply 85% because of two reasons. One is that you have not received the income in the current year, meaning while the payment is happening on cash basis, if the income is being accounted on accrual basis, and you have not received the money owing to which you could not make the payment, income tax says you will deem it as application. If the assessee submits a proof to the assessing officer at least 2 months prior to the due date of return filing that the income will be applied in the year in which the money is received. Yes. So I'm coming and clarifying that if you prove to the assessing officer that you will apply this income in the year of receipt, in that case I will not tax it as income for you. But please ensure that you file an application against it, and the application should be filed 2 months before. The due date of return filing. Second, I'm coming and saying that if for any other reason you're not able to apply it, you may not be able to apply it, the same logic will apply. Get a declaration from the assessing officer which comes and clarifies that you will make sure that you apply this money in the future years. Now the problem is, in case you have created as application in the current year and in the future years you do not do so, meaning you do not apply the money in the year in which you receive it, income tax says that you will now be taxable at a special tax rate of 30% under section 115 BBI. A special tax rate of 30% under section 11 BBI will get enforceable to you. So please ensure that you make your payments and accruals on time. Yes or no? Yes. Next, conditional accumulation, where I'm coming and saying that Rahul, I have money, I have received the money also, but for some reason I'm not making the payment today. And I have an accumulation happening. Income tax says no problems, boss. If you can take this money and put it into a special fund, and promise me that you will use this money for a specific reason, like maybe creating a building, then in that case also I will treat this amount as an application, provided that you use this money within the set period. And you do not use this money for any other reasons. Read, it says, when the assessee is unable to utilize 85% of the income, he may choose to accumulate and set apart this excess income for specified purposes for the future. Both accumulations will be treated as amount applied in the previous year if the following conditions are satisfied. First condition, the person has to get a form 10 for you. From the assessing officer at least 2 months prior to the due date of return filing, confirming the reason for which he wants to use the money. Second, the accumulation should not exceed for a period of 5 years. Any amount utilized has to be kept in 11(5) modes until it is not utilized. And then the money so accumulated should not be donated to any other person, meaning I should only be using this money for a specific reason of my charitable organization. Putting a clause which comes and says that I will use this money to donate it to someone else is not allowed. It is your money, you are supposed to use it. And then you ensure that you file your return on time. If you satisfy these conditions, then I will be granting this as an application to you in the current year and will be denying the application in the future years because I have anyway treated as application in the current year. Yes. What happens if you violate the conditions? It will be taxable in the years of violations. Yes. Next comes your anonymous donation. Income tax says if you are going to be receiving any kind of donations, it is technically taxable as receipt. But if you are receiving donations, the source of which is unaware, in that case income tax comes and says only 5% of the total donations or 1 lakh rupees, whichever is higher, will be treated as a normal donation. Any excess money which you receive will be called as an anonymous donation, which will be taxable at a flat rate of 30% without allowing any kind of expenses. Yes. So this provision is coming and saying that when you receive any anonymous donation without having a reason for the source, meaning I don't know who's paying the money to me, 5% of the total donations or 1 lakh rupees, whichever is higher, will be treated as an a normal donation, which will be added to your income statement. But any other incomes will be taxable at the flat rate of 30% for you. Please understand that this will not apply in case the anonymous donation is received in charitable reasons, meaning I'm receiving money in hundi and all in my donation box and all. That is not covered into the scope. Because religious activities, 99% everything is anonymous only. Yes or no? Yes. Example given to you on the screen. Pause it and watch it. Going forward, like I clarified to you, if you violate any of the conditions, not keeping it 11.5 modes, not utilizing it when you promise that you will utilize it, after 5 years you have not utilized and all those things, income tax says for the years of violation, it will not be treated as an actual income. It will be taxable at a special tax rate under section 115 BVI at a rate of flat 30%, without allowing any kind of expenses against this. Yes, now this is what your computational mechanism is when it comes to charitable organizations. Coming to the administrative part of it, because recently ICI has made it very famous to ask for administrative provisions. The administrative parts of the provisions come and say that if you want to claim any kind of exemption under this chapter, please ensure that you file your return on time. Please ensure that you file your return on time. The filing of the return has to happen on time. In case you do not file your return on time, no problem. Even if you file a belated return, you will still be denied, you will still be allowed for the exemption. Just because you don't file an original return on time does not mean that I'll deny the exemption to you. A belated return will also be eligible for exemption, but please file the return of income. Please file the return of income. Second thing, any person who wants to claim an exemption under this will have to mandatorily maintain a book of accounts and get the same audited from a chartered accountant. These audits, which are done by a chartered accountant, the report of which has to be submitted 1 month prior to the due date of return filing. 1 month prior to the due date of return filing. So which means 31st October being your due date of return filing, 30th September a form has to be filed and submitted by the chartered accountant, proving that this person has used this money for charitable purposes. Yes. Point number 3 comes and talks about how do you procedurally register yourself under charitable organizations. How do you procedurally register yourself under charitable organization? Income tax says if you were already a person who was registered as a charitable organization under section 12AA, we have now introduced a new section called as 12AB, and so therefore you will have to renew your registration against under 12AB. How will you do that? You will have to go to the PCIT or CIT and come and request him that you need to get an application under the new section of 12AB on or before the 30th September 2023. After the PCIT receives an application from you, he will, without asking you any questions, grant you a free registration for the next 5 years. And making you eligible for claiming deduction exemptions under section 12AB and section 10 and section 11. After you have done all this, when the 5 years lapse, you will now be mandatorily required to get a renewal also done. How do you do that? You will have to make an application 6 months prior to the expiry of the period. Informing the PCIT that yes sir, my due date is expired, I am going to lose my registration and therefore I would need a renewal on this. Kindly renew my certificate. At this stage, PCIT and CIT will check for the genuineness of the activities before granting the registration. Which means they will raise an inquiry on you and satisfy themselves that the activities of the business were genuine, the compliance of any laws are being done on time. Before they grant you the registration. But the moment they approve it and they grant you the registration, you will now get the registration for another 5 years. And then the cycle continues. Understand, all this is in case you are already registered in the old laws. Assuming I come and say, no Rahul, I'm actually planning to get a fresh registration under 12AB. Current year amendments come and say, tell me, are you already commenced business or have you not commenced business? Tell me, have you already commenced business or not commenced business? If you come and tell me that you have not commenced business, I will grant you something called as a provisional registration. Where I'll come and say that before the start of the previous year, 1 month prior to that, you will have to make an application to me and tell me that you have not even started your activities right now, but would need a provisional registration for you to set up yourself. Yes, after receiving the application, the PCIT or the CIT within 1 month from the end of the month in which the application is received will grant you a provisional registration. Which will then be valid for a period of 3 years. Yes. After you get a provisional registration, you will have to go back to the officer and come and tell him that, sir, I had a provisional registration with me which was granting me an exemption, but within a period of 6 months prior to the expiry of the provisional registration or within 6 months of commencement of activities, I'll have to go back to the officer and inform him that, sir, now I would need a final registration from you. The moment the PCIT receives the application, the same process as renewals will follow, which means he will check for a genuineness and check for compliance of law and then grant you a final registration for a period of 5 years, which will be valid by you. But current year amendment, in case you find out that you are already starting to work, meaning when you created the entity itself, you were already commencing work and therefore you didn't have to wait for final registration. In that case, income tax says, let's not wait for any provisionals. because your activities are already commenced, I have the authority to come and check whether you're genuine or not, and therefore I will straightforward grant your final registration. I'll straightforward grant your final registration. How will that be done? I will have to make an application to you at any time during the previous year informing you that I am doing my activities and it is a charitable organization, and therefore grant me the exemption. The PCIT on receiving the above information will check for the genuineness and the compliance of the laws, and within 6 months from the end of the month will grant an application to you for a period of 5 years. For a period of 5 years, and then the renewals and all will keep doing as it is. The renewals and all will keep doing as it is. Yes, yes. Next, I'm coming and saying that, Rahul, when I took the registration, I had some intentions behind it. But later on, it so happened that my object clause changed. I'm proposing to do some other activities which are not authorized by the PCIT. In that case, you'll have to file a fresh application to the officer informing him that, yes, sir, I'm proposing to modify my activities. If you think that this is in line with your compliance, please grant me the application. At that point of time, PCIT will again check for genuineness and everything, and therefore within a month of 6 months from the end of the month, they will either approve the new modifications or they will cancel your registration altogether. And point number 4 is where income tax comes and clarifies that, see, if you're already claiming exemption under section 10, 11 and 12, meaning as a charitable organization, you will not be granted any other exemption under any other section, the 1023C, the 1046 and the 1046A, like I clarified earlier. Yes. But in case you decide that you want to earlier switch from 12 to 1023C or from 1023C to 12, meaning either of the two you can do. Now, if you are moving from one of the exemption to another exemption, you'll have to file an application to the officers informing him that, yes, sir, I would like to go for the fresh application. I would like to go for the fresh registration under the different act, and therefore the rules of that act will apply. Meaning basically you have to do the same 6 months provisions, and therefore after being genuine and all those things, they will grant you the next exemption. Yes or no? Yes, a table created for you. Again, pause it and watch it carefully, which will come and summarize how your registration process should work. This is something which you need to keep from exam perspective. Again, more of an MCQ question rather than a theoretical question. So therefore, pay attention to that extent. Yes, moving on forward, people. If you're coming and saying that, Rahul, I already have a registration, and later on the PCIT notices that any of the violations has taken place in the year, or the PCIT receives a reference to withdraw the application because the officer feels that the person is not genuine, or the case has been selected for a scrutiny under the risk management strategy, and under the case it has been proved that the person is not doing genuine activities or the person is not complying with any laws. In that case, he will call for further information to PCIT and CIT. They will call for further information within a period of 6 months from the end of the quarter, and will give you a notice, show causing as to why you should not be denied the registration. At this point of time, the assessee will have to reply to the case, and after replying to the case, the officer will pass an order in writing after granting him all the opportunities of being heard, whether he is okay with the proposal or not okay with the proposal. If he decides to deny the registration will be denied from the day on which the order is passed. Specified violations cases are given to you, not very critical from exam perspective, so feel free to go through it. Yes. Then I am coming and saying that, Rahul, there are some other cases also where I will deny your registrations under section 10, 11 and 12. What are the cases? These are defined under section 13. Section 13 comes and says, if you are an income from private religious purpose, which is not created for the benefit of all the public at large, any exemption granted to you will be denied away. Next, any kind of income for a trust established for a particular religious community or a caste, meaning I am coming and saying it is done for a specific reason. I will not permit all those exemptions, except where it is done for SC, ST, OBC, women and children. In that case, it is permitted, but other than that, specific religion kaga put to the cases will not be allowed as an exemption. Next, any kind of income which is used for the benefit of specified persons under section 13.3. Specified persons are coming and saying any author of the trust, founder of the institution, person who is receiving contributions more than 50,000, a member of the HUF which has made substantial contribution to the fund, a trustee or manager of the trust, any kind of relative as per section 56.210, and any other concern in which the person has more than 20% substantial interest. Any kind of money applied to these kind of people will not be allowed as an application. But rather will be treated as a deemed income also, which means they'll deny the application, at the same time treat it as a double income also, thereby taxing it twice. But they're coming and clarifying that if you are into any kind of medical institution, educational institution, hospital services, which is run by the trust and is given to these kind of people at a fair market value price, meaning I'm doing it at a market condition rate, then in that case I will not treat it as a violation. It will still be allowed as a reduction. And finally, if you're not depositing any money in the 11.5 modes, If you're not depositing any money within the 11.5 modes, if you are planning to not have money within 11.5 modes, but you're withdrawing the money, if it is for the purchase of asset, please ensure that the purchase of asset takes place within a period of 1 year. Takes place within a period of 1 year. If you do so, then I have no problem. But if you don't do so, then whatever money you withdrew will become taxable under section 13. Under section 13. This is a clarification given to you. Leaves you the small topics, people, where they're coming and saying, how do you become a specified violation under section 115 BBI? How do you do that? If you are going to have a business receipt exceeding 20%, if you're going to have a business receipt exceeding 20%, in that case, you're violating conditions. If you fail to maintain books of accounts like I requested you to do, if you fail to get your books of accounts audited and get me a auditor certificate before the due date of return filing, if you fail to file the return of income, in all those cases also, I will violate all the conditions. I'll violate all the conditions. Income tax will deny any exemptions to you, but will treat you as a normal entity. Which means they'll come and clarify that the income will be computed after allowing deductions only to the extent of revenue expenditures. Meaning, as a normal PGBP activity, I will treat it as a business and I will allow normal expenses to you. What I'm not going to be allowed is the payment which is happening out of corpus, any kind of loans and borrowings, because like I told you, loans and borrowings or actual expense has to be claimed as deduction. Any kind of depreciation will be allowed if it is not allowed in the prior years. If it is not allowed as prior years, and any kind of donation or contribution to any other person will not be treated as an deduction. Meaning normal PGBP you'll do, but you will ignore all those 4 items. While computing deduction, please keep in mind that you will not allow any capital expenditures. The provisions of 40 and 40A3 will still continue to apply, and any kind of deduction of allowance or set-offs will not be allowed under the provisions of the Act. So no deductions or set-offs of any other section will be allowed under this Act, meaning flat tax will be paid under this section because you violated the conditions. Yes. Leaving you the last topic of 1023C, people, which comes and clarifies that if you are any of these entities, forget section 10, forget section 11, forget section 12, get a straightforward exemption under 1023C. Get a straightforward exemption under section 1023C. First is coming and saying any kind of university or educational institution whose at least 50% of the total receipts is by way of government grants, meaning a fully government aided fund where 50% of the grant is coming from government, these entities are fully exempt from taxes. Second, any kind of hospital or other institutions whose at least 50% of the receipts is again coming from government grants, Third, they're coming and saying any university, educational institutions, hospitals and other institutions whose aggregate annual receipts is less than 5 crore rupees. An exam question, people, where they come and say, I have a hospital with receipts of 4 crores and I have an educational institution with receipts of 1 crore. When you check, you have to check all together, meaning together it is less than or equal to 5 crores, therefore the exemption is common. But if you come and say that the hospital has 4 crores and the education institution has 2 crores, together it becomes 6 crores and therefore both the entities will be denied exemptions. Overall, the entity should not be making more than 5 crores. Yes. Next, any other fund or institution, this is your 1023C, 4, 5, 6 and 6A. For this, income tax comes and says the same rules as 10, 11, 12 will apply. Meaning 15% has to be set apart, 85% has to be applied, and all the other conditions. The same rules will apply. Now, this is the last attempt where this is going to be tested, because from next attempt, these provisions have been scrapped. Yes, so from May 25 onwards, this provision has been scrapped. So this is the last attempt where they'll be testing it. Regardless of it, it is not important whether it is 1023C or whether it is 10, 11, 12. The provisions are the same. So therefore, you follow the same provisions. Leaving you the last 2 case laws, people, where they claim and say, if you want to claim an exemption under 1023C, the assessee must be engaged solely in the business of educational activities and cannot have any other activities unrelated to education. The objective of institution should not be profit oriented. However, surplus arising incidental to providing educational facilities is permitted. Therefore, providing the premises or infrastructure to other entities for conducting workshops, seminars and event educational courses are not permitted, because they are not part of my educational activities. They are given to some third party. Therefore, it will not satisfy the conditions. You will have to move to 10, 11 and 12. Case law number 2, imparting education or training in a specialized fields like communication, advertising, etc. and awarding diplomas and certificates are also eligible for tax exemption under 1023(6). It is not mandatory for institutions to impart education in a formalized manner or conduct only recognized educational courses. As long as you are imparting education, it is good enough. It does not have to be a recognized course like an MBA or something like that. A good enough course is also permitted. This is what your case laws are. Yes, this marks the end of your charitable organizations. I might have been a little fast, but if you read in the same speed is when you will be able to prepare for your exam. So please have your book in front of you and then read this audio lecture so that you understand this a little better. Yes, please do that. After 2-3 readings, you will anyway get used to it. Yes, great. I will come back with further videos on the balance topics, people. Until then, see you. Thank you. Happy reading.